We're live. Hi, Nicole. Welcome to Venture with Grace.
Hi, Grace. Thanks so much for having me on. Appreciate it.
To start the show, I would love for the audience to get to know you a little bit more. So you started your career at Goldman Sachs. You have worked at U.S. Department of Treasury. You have worked at Bain Capital, and you were a partner at Altimeter, and now you're managing director at Insight Partners. Why don't we start with what are some core lessons that you've learned early on in your career that kind of shape you into who you are today?
Yeah, sure. I'm happy to kind of walk through some of that. I'll say that my career in finance almost started by accident. I actually thought for a long time I wanted to go into politics. I worked a long time ago for an executive at eBay who ended up becoming the state controller and then running for governor of California. But one of my Stanford classmates who was a year ahead of me and later became one of my best friends introduced me to banking. We were in a class together and he'd done his summer at Credit Suisse. And I remember him explaining, one, what investment banking was, which I thought was fascinating. And then two, that he worked like absolutely crazy hours, which didn't seem that exciting. But I was convinced enough that I wanted to prepare and try to do banking. So I landed a summer analyst role at Goldman in the tech investment banking group. And I think, it was a total grind, but I loved the learning curve. And I joined full time after graduating. I really wanted to understand finance, technology, and what it meant, I think, to be commercial. I think one of the really powerful things about, being at Goldman and seeing what investment bankers do, they're talented at financial advisory and M&A advisory. They're also exceptional salespeople. They're selling those services to CEOs and CFOs. And I think some of the bankers that I worked there with were some of the sharpest and most commercial minds I'd ever seen. I also got a chance to spend a lot of time, this is a while ago, around the time of the great financial crisis, on sectors like semiconductors, mobile, and cloud that are so relevant today. But back then, mobile and cloud were so new that it felt like a bold choice to spend time on those areas. And it turns out that they became two of the most transformative parts of technology. One of my first bosses actually went on to become the CFO of Twitter. And I remember fondly that he and I wrote the first market overview deck on mobile together. And, looking back on it, it was just a great foundation. After Goldman, I wanted to get closer to the investment side of the world. And I joined Bain Capital, which was a larger private equity firm. I was drawn to Bain because, the people there are brilliant. And they have this incredible depth when it comes to understanding business strategy, industry structure, and operations. And a lot of that comes from their roots at Bain & Co. Consulting. And so I felt like I got immersed in that way of thinking, which was powerful. I started in Boston on the North America Leveraged Buyouts team. And then after a year and a half, I moved to an emerging markets team in India. So I moved to Bombay and I focused more on growth equity. It was a really cool experience getting to work with businesses at different stages of growth and also in very dynamic markets. And I learned a lot, I think, there about, what makes businesses tick and how to assess opportunities in different contexts. Actually, before I joined Bain, I had the summer off in between banking and private equity. And that happened to be right at the middle of the global financial crisis. I was maybe 24, 25. I was debating whether I'd take the summer off to travel or do something more impactful. I ended up spending the summer at Treasury, and it was at such a unique moment in time where a lot of really incredibly talented people, not myself, way more talented than me, were stepping in from industry to help stabilize the economy. That summer gave me this whole new appreciation for public service and how finance intersects with the broader economy and government, which was is really exciting learning experience. In terms of what I've been doing recently, I went to business school, and when I graduated, I was really focused on doing tech investing, which is how I ended up eventually joining Altimeter Capital. That's a tech-focused hedge fund that built out its private investing platform. And working at Altimeter was a great experience. Brad, who's the founder, has this amazing ability to focus on what matters and block out all the noise. He's this he preaches essentialism. He pushes everyone to have a high degree of ownership and conviction, which shaped a lot of how I think about investing today. And he's very much about identifying where the puck is headed and investing as early as possible in the most important businesses that have the potential to be breakout successes and large, durable public companies over time. And those years really solidified my passion for investing in tech companies that were driving the future. I joined Insight over 5 years ago now, and it's been an amazing ride. I joined as managing director here. I think some of the things that make Insight really unique are we've been software focused, forever, for our 30-year history. I joke around that we've been software focused before software was cool. And we've spent decades building expertise in this space and doing so across a lot of different categories. So we invest in venture, we invest in growth, we invest in private equity. I focus a lot on venture and growth investments and help lead our West Coast presence. I've also spent a lot of time expanding our global reach, working to build presence across areas like India and Southeast Asia. We've partnered with some incredible companies in those regions like Cred, Dunes, and Gcash. We just closed our Fund 13, which is a $12.5 billion pool dedicated to software-focused, stage-agnostic investing. And just focus now on finding amazing founders and helping them build something bigger and more durable. And it's been a great journey so far.
Totally. I was gonna say, I feel like I told you this, but I feel like your portfolio is amazing. And I want to maybe I think two things that you mentioned early on I thought were pretty interesting. One thing is like you mentioned about you kind of like learn how to be commercial minded. Can you maybe double I guess can you just unpack on that? Like what are something that you feel like are impactful in terms of I guess how do you become more commercial minded? Since we're living in Silicon Valley, every tech company essentially need to land clients to survive. But I feel like a lot of people talk about product or go to market, but I wonder, how do you think about being more commercialized?
So it's funny, at that time I thought about it as I was a college kid who'd never worked in an office before, going into trying to get exposure to what it meant to be in a suit and tie culture, and you work and understand how to work and present in front of CEOs and CFOs of some of the largest tech companies in the world. And I think that for me, banking was a way to get that commercial exposure and also to learn from people who had just done that so well. I think if you're a CFO or CEO and you're looking at buying financial services, effectively M&A advisor, financing advisor, there are a lot of really talented bankers out there. So how do you separate yourself from everyone else? And I think some of the early lessons I learned there, and I think it's applicable to enterprise software, is really, really get deep with your customer, and not just in a transactional way, but in a human way. When we were going through the global financial crisis, there wasn't a whole lot of business activity going on. But the push from our leadership in banking was, doesn't matter if there's not a deal, go out and talk to your clients. Ask them how they're doing. It was an emotionally difficult period for a lot of people. Talk to them. Tell them what you're seeing in your industry. Tell them what you're seeing from a macro perspective in your sectors, and just engage in a very human and thought leadership way with your potential customer. And then I think the other thing is getting creative around in an environment where there's not a whole lot of deal activity. And I think about the period we went through in 22 and 23, and now maybe things are changing a little bit, where IT budgets contracted a lot. How do you get creative in finding business in an economic downturn? And when we were at Goldman, we didn't do a ton of IPOs at that point, but I helped build a lot of our rig defense practice. So we had companies that were very well capitalized and companies that were more small and mid caps that were seeing their stock prices, cut in half. And so we went into a lot of those companies and offered our services to help them in case they were facing a hostile takeover. And we could help advise them, throughout that hostile takeover journey. I worked on 2 of them. And in some cases, by virtue of doing that work, which in and of itself didn't pay a ton of fees, we would earn the right to eventually represent the company on a sale process or financing later down the road.
Well, I really like what you said about, like, I feel like building the human relationship component is really really important. Since you have mentioned that, like, you have worked with, let's say, the CFO of Twitter, or Brad Gerstner, who is like obviously an influential person in the investing industry, who is on your personal board of advisors, and how do you kind of like approach either like building these relationships, and also like what are some core things that you've learned from these really strong thought leaders?
Yeah, maybe I'll break it down into like two components. One is like the personal board of advisors, and how that helps in decision making, and maybe can also talk a little bit about some lessons learned as it relates to investing, from some of these different experiences. I think this concept of a personal board of advisors, I like it a lot. It was not something I set out to have, but I definitely feel fortunate that over the years I've kind of naturally developed a close group around me that helped me make important decisions. And I think that I think of them as having 3 archetypes, and really much more personal archetypes than strictly professional archetypes. I've got my trusted friends who are in our industry. It's a very small group of people, who also probably work in venture capital, and they understand that we have shared domain knowledge and experience, but we're also friends, and so we have our best interests at heart. And these are like people I can have open conversations with, vulnerable conversations, ask tough questions around how would you handle this, what would you do differently, how can we get better and push each other in our field of work. And then I've got my brother, and another set of very close friends who don't work in VC, but they've known me forever, and they're my sounding board for all sorts of big life decisions, which is exactly what I need. And then, now I got married a year ago, so maybe the most important, thank you, board, member of my personal board is my wife. She's an executive in biotech. She's much, much smarter than me. We're very value aligned, and we spend a lot of time together, and now we make decisions as a team. So whether it's big work decisions or personal ones, that's, those are some of the different components of my, my personal board.
Love that. I wonder, I guess, like, how do you think about the things that like they have like kind of taught you throughout your career journey?
Trying to think. I think at a high level, and it comes down to also like how I make decisions or approach situations. I think I can have a tendency to be very right-brained, gather data, analyze, think through risk reward. I think increasingly throughout my life, and I would credit also a lot of these people who I just mentioned for this, is pushing like a much more heart and gut framework to make decisions, or to think about risk or being courageous. And I think that's more a process of looking inwards, like thinking really authentically about, my value set, and making decisions based on authenticity and values and instinct.
Love that. What is one skill that you're constantly trying to improve? So I think you, at the beginning, you mentioned about sales skill. That's like a really important skill on Wall Street or in investing. Just curious, like, what are something that you personally kind of like actively trying to improve?
I think right now, one of the things that I think a lot about is, as an investor, I think one of the core skills is how do you assess durable growth? And I think that is being tested even more so now in the age of AI. So we're at this Cambrian explosion of AI innovation. It's a rapid transformation. It feels like the internet. I'm not going to spend too much time talking about that because it's just cliche at this point, even though it feels true. But this growth that we're seeing, you're seeing it across established players, the Mag 7, the hyperscalers that are making huge strides. You're seeing it across AI native startups that are being formed and scaling at a really fast pace. I was at a YC demo day, I think the first in-person YC demo day that they've done in 5 years in November. And of course, there were some incredible companies, but a lot of the chatter in the audience was around how even at a very early stage, those companies were demonstrating more growth comparatively than had been seen in a lot of other batches. And it's not uncommon now to hear about startups going from 2 to 12 million of ARR in under a year. And that's something that would have been rare and exceptional in the late 2010s. But we're just seeing more of it. And I think that's a consequence of IT budgets shifting towards AI, boards mandating investment in AI, and buyers experimenting with a lot of different vendors in the space. And that's super exciting. It also creates a challenge for investors around how do you assess the durability of growth in an end market where there's so much growth overall and things are changing so fast, and it raises questions. So how much of current growth is driven by experimentation rather than long-term adoption? Over time, are buyers going to consolidate spend? What happens if OpenAI or some other major player in this ecosystem, another foundation model player or hyperscaler, release their product that completely changes the competitive landscape overnight or the economics of the industry? And so I think developing a framework for assessing durable growth is more important, now than ever. And I think a lot of it maps to traditional software investing, but you've got to be even more focused on things like customer retention and expansion, evaluating the mix and types of use cases and real engagement that's happening in a product, and testing the durability of the moats in a product, talking to the customers and validating, what the buyer is saying, and ultimately getting back to the team and do you feel like you're investing in a team that has the ability to iteratively innovate in a market that's evolving really rapidly? And I think that a team that can launch, scale, improve multiple products over time, is an important indicator of durability. I'm getting a little bit of background noise. I don't know if you are.
Wait, is that from me or from?
I don't know.
Oh no, really? Okay, so I can also try to plug in my headphone, but I think one of the things I find really interesting, since you mentioned about durability of growth, I definitely want to tap into the trends that you're seeing in the investment space. So obviously we're talking about AI. I think one of the things about AI is the differentiation between different companies. Since you are investing in more towards later stage than in the past, we have a lot of investors who are in seed, pre-seed, or earlier stage like Series A and stuff. How do you when you are looking at the company, they already have successful business model, or at least they're on the track of becoming a fast growing company. What are the AI trends that you feel have the durability and also is important in the space? Or AI, yeah.
Yeah, I mean, I would say that one trend I'm probably excited about right now as it relates to AI, and I think it speaks more to this point around durability, is vertical AI applications. So while AI is driving, transformation and growth across the board, I think one of the things that stands out to me or is exciting to me is how are companies using AI to tackle highly specific challenges in industries like healthcare, financial services, logistics, real estate, what have you. And I think that these new vertical AI applications, they're not just augmenting workflows. They're often deeply integrating into these workflows. They're autonomously performing tasks that were previously manual or inefficient. They're tapping into some, proprietary data set. And they maybe have a differentiated understanding or a very industry-specific understanding of their customer and deep customer relationships. And I actually think these companies could be post-LLM vertical-specific AI companies that are building in, let's say, a very sleepy category that has yet to be disrupted by SaaS. And because they're offering something so significantly better, you're finally able to penetrate legacy products with new solutions. Or they could be pre-LLM companies that, let's say, have ubiquity in a category, in a vertical. They have differentiated data, they have differentiated customer relationships, and they're able to turn on AI in a differentiated way as a result and deliver unique value to their customer base. And I think those two archetypes of companies have the potential to build, more durable businesses, let's say, than a more thin layer horizontal application that has more OpenAI disruption risk. And I think the other thing that's just kind of exciting about that vertical AI category is you're serving, or you have the potential to serve budgets beyond traditional IT budgets. By automating a lot of complexity in an industry, you can start to unlock new markets, especially a services TAM, which makes the potential end market much larger than traditional campus SaaS.
You mentioned a really important thing, that's the IT budget, and maybe they could, like, certain vertical AI companies could tap into the service TAM. Like, how, I guess, like, can you give us like a quick overview on how does the IT budget kind of spend it each year? So for example, how much are they spending on cloud, or how much are they spending on, different SaaS products, and in terms of like services, like, just curious, like, on if you guys have any insights on like these like different domain on how people spend money.
At a high level, global IT spend is a massive category, and it's been consistently growing over the last, decades. I think what's exciting, and maybe some of the point I'm making, is that services as a share of our economy relative to IT budgets is multiples larger than IT budgets. Mm-hmm. And I think we're in this period where, let's take accounting as an example, because I've been dealing with doing my taxes. Software for accounting, would traditionally design an on-prem or then later a cloud software tool that they would sell to accounting, and that is an existing IT budget. I think the promise of AI and the promise of vertical AI applications now are, well, maybe I as a consumer can just interact with a accounting agent or a human augmented accounting agent that I can just accomplish the task that I'm trying to accomplish, and I may consume more and more of that service. And that may unlock a much bigger market opportunity than just building a piece of software and selling it to an accounting firm.
Totally. I wonder, so like, speaking of, investing, so we talk about your perspective or the overall outlook on AI. What are something that, like, so maybe we could start with, like, since you're at Insight Partners, and maybe we could give the audience a little bit background on, like, how you guys approach investing, and then we could talk about like the evaluation process of these different subcategories of companies, since I feel like you have a very portfolio.
Yeah, totally. So, at Insight, our process is very grounded in, I think, two things, and I'll kind of talk about both. One is our deep focus on software. So we've been investing in software and software-enabled businesses for over 30 years, and that long-term specialization gives us a lot of institutional knowledge, pattern recognition, and shared language when we're sitting together as a group and talking about companies. And as part of that sector focus, we do a lot of tops-down thematic thinking. So mapping out areas within software like AI applications or the agent ecosystem or fintech infrastructure, and figuring out where the market is headed, trying to stay on top of trends and identify interesting companies that are potential market leaders proactively in these themes. I'd say we're equally bottoms up oriented in our sourcing and evaluation of companies. So we have over 50 professionals in our sourcing team who are super talented, and they're to point around commercial, they're very commercial. They're like these brilliant professionals who also just have this unique, and very young professionals who have this unique ability to get on the phone with the CEO and form a relationship. And they're often out meeting 15, maybe 20 plus companies a week per person globally across the software ecosystem. And we go into those meetings with an open mind and a lot of curiosity. And sometimes you meet a founder or see a company where the momentum, the customer love, the raw potential just stands out. It may fit into an existing tops-down framework that we have, and it may not fit at all. But we'll dig in and we'll do the work to build our conviction in an investment opportunity. And that process, when we get into diligence, it's really about understanding the company from a bunch of different angles. Really core for us is growth and momentum. So when we're looking at growth, we're of course looking at growth in ARR or an associated revenue metric, but we're also looking at the derivative of growth. So how is net new ARR trending over time? Retention for us is really key, both net retention and gross retention. As is breaking down the composition of growth. So is it from into like, let's say, growth in unit number of customers versus price, or expanding ACV. We also assess CAC paybacks to understand the quality of growth. We're also very focused on the efficiency of growth, and we probably orient more to this than, let's say, a seed investor, just by virtue of some of the stages, some of the companies that we're looking at. We want to understand how much investment is required to deliver the growth that we're observing. And burn can be okay, but we've got to have conviction that the long-term unit economics are sustainable and that the size of the prize is worth the burn that we may incur in that journey. For me, something that I like really focus on in my process is voice of customer, especially because we're looking at companies that are post-product market fit. I spend a lot of time talking to customers. The numbers are great, but really hearing from the customer, that gives us a window into how strong the product is and how differentiated it feels in the market. And then, founder and team, ultimately we're betting on people. We need to feel confident in the founder and their team, their vision, their ability to execute, their grit. And I think those are some of the big things that go into, when we see all those things aligned, we get really excited. The last part is the deal. So, what we have to think about, like, what are we investing at in terms of valuation? What do we think the potential upside can be? And generally I always think in terms of a fan of outcomes. So, your upside case, your base case, your downside case. Your upside case is if you really hit it out of the park, everything works as planned. I tend to like right-weighted fans. So fans of outcomes where, your upside could be really, really big. But then, your base case, hopefully if things go as planned, you're still making, a very solid return. And because we're tending to invest in preferred equity structures, in the downside case where things really don't work, you're generally hoping that you can get your money back.
Totally. I wonder, since you mentioned about you were talking to the customers, and then also I think growth, as you mentioned, is one of the major driver for you guys to recognize these companies. I wonder what kind of growth level would that actually pique your interest? Since I feel like a lot of the company that you are looking at are in very different subcategories. So for example, there's like the no code tool, there is like the fintech companies. So I'm sure they have like a different growth metrics. I guess like what are like, is there like a universal benchmark that will actually pique your interest?
So I'll say from the standpoint of us as a firm, we're actually less focused on a specific metric. And I think one of the things that I've learned, if I like reflect on some of my lessons as an investor, is there are lots of different ways to be an investor and make money. And it's not one size fits all. We definitely tend to, be growth oriented, but I've worked across venture growth, private equity, public markets. I mean, some of the fastest growing public companies in the public markets right now may be, high 20s, low 30s. And so I think like the key is like finding what works for you and what's authentic to your style. I tend to prefer higher growth, but the growth rates that we invest across at Insight, they range. They can be ultra high growth, they can be good growth, and then they can be, let's say, more moderate growth, but the more moderate growth companies that we're investing in also have profitability. So, I think you have to assess growth not just in the context of that rate, but growth in the context of the other metrics that a business is exhibiting, and ultimately what you think that business can be in 5 or 10 years.
For sure. I wonder when it comes to like talking to the customers, what would be the question that you would ask for the customer, and then what type of answer are like the good indicator of like this company is like irreplaceable? Because I feel like some of the companies, they are really great at like getting the customers, but however, like the unit economics may be wrong, or like people could grow at all costs, like spending a lot of money to do customer acquisition. How do you think about like the things to ask the customer, and then what kind of things are you looking to hear?
Yeah, I mean, I think we tend to actually, our customer work tends to have two components. One is, we'll actually write very detailed surveys, and we'll try to get a large N of customers answering very, very detailed surveys. And that's like a very data-driven way to kind of develop trends on how customers, let's say, evaluate, encapsulate with an NPS score, one vendor, maybe the one vendor we're diligencing versus, let's say, other vendors in the market. And, we can survey, are they willing to increase their spend, decrease their spend? How would they respond to hypothetical price increases, likelihood to rip and replace, et cetera, et cetera. I find when I'm actually on the customer interview, the things that I like to, bless you, focus more on is really understanding use case. Part of that is so that I can understand the product in a differentiated way. Second is, and this is a little touchy-feely, like what is driving delight? Like I think really special companies and products delight the customer. And if you talk to the customer, there's usually a way that they can articulate that delight. I remember I actually never got to a chance to invest in the company, but a long time ago, surveying or talking to buyers of both Zoom and Slack, and the way that they would talk about those products was a way that just drove home this delight. And then getting much deeper into, okay, you're buying the product, but are people actually using it? Are people using it and day to day seeing that delight or value across, the individual who bought it, but also the whole theoretical expanse of users who could use that product in an organization?
For sure. Since like some of our audience may be investing in a little bit earlier stage than Insight Partners, like what are, maybe if you could give us some example of companies that you've seen that actually made it to a later stage compared to some of their competitors that are like also creating like a similar product but did not like really get investment from you guys, or like later on investors. Obviously we don't have to name names, we could just use like things that you've seen that are like interesting.
Yeah, I mean, I don't want to be too specific in terms of, let's say, our portfolio, but I mean, I mentioned it before. I mean, and then this is an example that's now from kind of the past, but Zoom was one of those companies where there were other video conferencing players in the market prior to COVID and the work from home, you know, period that we went through. But it was just a product that when you surveyed the customer or the user, it stood out as being a truly delightful experience. And you saw that in the numbers of the business as well.
I totally agree. I feel like a lot of the product really have, like you mentioned about like delight. I feel like it's just like creating an experience that's more like smooth instead of just like accomplishing something. I think it just like really surprise customers, really important. When it comes to like, investing globally, I noticed that like some of your portfolio are in, Singapore or like India, among other um, like companies. And I wonder, like, how do you think about like from a global approach, what are some interesting trends or like differentiations between like just in the US market?
Yeah. So yeah, so I've spent some time looking at companies in a lot in India, in Europe as well, and some in Southeast Asia. And I think one lens we have as insight, because we're so software focused, is we don't like, I sit in the Valley. I think this is an incredible place in terms of innovation, and we've backed many companies here, but we don't actually care where a software company is built. As long as it's a talented founder who's building something durable and differentiated that we think, there's an opportunity for us to partner in an authentic way, like we're interested, and we want to find those special people creating special companies all over the world. I think a lot of what we have found when we look for those software companies, it's not necessarily a geo-specific framework as much as it is just letting our sourcing platform find these businesses, often building products that are serving a US or European market, because that's where a lot of the IT buying is happening. But they're just building special companies, and maybe that's taking place in Bangalore or Tel Aviv, or another market. And so part of the work in the geos that I mentioned is finding those software companies that are being built in a different geo, but often serving a similar market as a company that's being built here. I think the second part of this is like, I find that actually the rise of the consumer and the power of the consumer and some of the associated trends is very powerful. And it's different than some of our software theses as it applies to emerging markets. I think India is becoming one of the most exciting consumer economies, globally. And so we have and because we tend to invest in more software-like businesses, the way we've chosen to play some of that theme has been investing in some of the consumer fintechs or the enablement layers of some of the consumer fintechs. Companies like Cred, M2P, Cred Avenue, Slice are a handful of those businesses that are capitalizing on that theme in India. I invested in a company in the Philippines called Gcash, which is just a fascinating business. They're now the leading fintech super app of the Philippines. You could compare them to an Ant Financial. They started with a wedge product that had a ton of resonance with that consumer base. It was mobile top up and a mobile wallet. And then they've since layered on many additional products, lending, wealth management, a merchant business. And they've been able to scale a company with a very large growing user base, increasing market share. They've amortized their customer acquisition costs across an increasing ARPU as they sell more product. And they're this very unique combination of high growth at scale, and they're very profitable.
Totally. Speaking of like investing, since you have been an investor for a long time, what are some core lessons that you've learned as an investor?
Yeah, so I mentioned a little earlier on that I think one thing I've observed is there's lots of different ways to be an investor. Whether it's venture or growth or private equity or public markets. I've had a chance to work with different pre-seed and seed investors, like on companies that we've collaborated on or boards, and so I feel like I've gotten this unique opportunity to see lots of different styles at work, and I think you've got to find what feels authentic to you and fits your strengths. But I think some of the common lessons I've picked up, one is about risk reward. I think risk reward is this, like at the heart of every good investment is like a really thoughtful understanding of risk reward. And what I mean by that is not just setting out to chase the biggest potential upside, even if that's a 1% chance of success. It's having a framework of mapping potential outcomes, taking stock of risks, assigning probabilities, all in the context of the valuation that you're investing in a company at. And I think an earlier stage investor is going to trade off more risk for more reward. But the framework applies across the board, whether you're looking at a seed deal or a Series A or a private equity deal or a public company investment. This framework forces you to ask, what's the upside if things go great? What's the base case if things go okay? What's the downside if everything craps out and you've got another financial crisis, or the founders break up with each other, or the company doesn't scale? And how likely is each scenario? And how much return of capital would I be getting relative to my entry price across all of those scenarios? And I think that discipline helps you avoid make bad investments. And then it also gives you the confidence to really lean in when you see asymmetric upside, when you see outsized risk reward.
Sorry, keep going.
I was going to say the other thing that I mentioned is, and I think Brad at Altimeter really drove this home, is that the most important thing you can do as an investor is build conviction. And you can, like metrics and multiples are important, that can contextualize things. But at the end of the day, it's like your process has to really help you build conviction in what is this business going to look like in 5 or 10 years, based on your understanding of the market, your understanding of the company, the team, whether you think there's durable growth. And is there a future where you see this company that you're investing in being significantly more valuable than you're paying today? And if you have that conviction, then concentration can actually be your friend. I think a lot of people, would say that you have to have this really diversified portfolio, and you of course have to have some diversification. But if you have 10 on 10 conviction in an investment opportunity, and you're right, having more of your portfolio weighted to that investment can be a great thing in terms of driving fund returns. And at Insight, I think one of our, one of the things that we do really well is that when one of our companies is performing well and we have differentiated knowledge, from already partnering with them, we're not afraid to double or triple down because we know the team, the market, the company better, and we want to lean in more when the risk reward looks favorable.
For sure. Since you mentioned about the risk and reward, as well as like concentration approach, like I wonder, how do you think about portfolio construction? So like, since there are, I guess like a lot of the investors who are listening in, and they may be like having a smaller fund, who are in a more earlier stage, having the index approach, just say like, 30, 40 companies, like same size check into each company. But I feel like that probably doesn't really apply into like a later stage capital. So how do you think about like when to full on, when not to, and like in terms of investing in companies that have very various level of valuations? As like there's AI company, I feel like they're like some of them are like very highly valued, and like how do you think about portfolio construction in that sense?
Yeah, I mean, I think it actually just it comes back to those two things: risk and reward and conviction. I think if you're doing a lot of early stage investing, one of the ways that you address risk and reward is you're often getting a lot of ownership by being the first check, the second check in. You're investing at much lower nominal valuations, and for less nominal dollars, you're getting a lot more ownership. So if things go right, you can own a much bigger portion of that. Certainly relative to an investor that's going to come in typically 3 or 4 rounds later. I think every decision around a follow-on, whether you're an early investor or a kind of growth investor, should be rooted in, well, do you have conviction in that the company can do what they profess that they're going to do, that the company can be bigger, not smaller over time, and that when you use your risk reward framework, like you're going to get to a strong, kind of risk adjusted outcome by running that follow-on check. And I think there are certainly, I think I started by saying you can make money in a lot of different ways. You can totally, there are people who are exceptional investors who have that approach of having a large early stage portfolio, and I think they do exceptionally well at that. And there are folks who take a more concentrated approach.
For sure. Let's go through your diligent process, since I feel like in obviously later stage there's more data, whether it's customer data or just people's usage data on a certain app. What are the most important factor that you take into consideration when it comes to due diligence?
Yeah, I think at a high level, it's some of those things that I pointed out in the process that we use to evaluate companies, which is one, do we understand the market really well? Do we have a thesis around why the company in the market is a market leader or has a durable and attractive position in that market? And then looking at growth and efficiency of growth, the voice of the customer, really unpacking the product and the durability of the product, and founder and team, because this is a people business, and you're betting on, certainly as a venture growth investor, you're betting on people. I'd say that actually even applies to public markets. I mean, I'm not a public market investor, but my friends who are, the ones who are really insightful are thinking deeply about the CEOs and leaders of the organizations that they're investing in, and how they're thinking about strategically moving their organizations over time.
What are things that you would look for in a founder? So obviously, if the team are tenacious, a lot of times people say if they are a tenacious founder, or if they're, I guess that's one of the most popular answer. But what are some of your insights on the team?
I mean, there are lots of things, but I think 2 more value-driven components are integrity and grit. Not just I'm going to tell the truth, but also I think some grounding in truth in how you approach your process around product and customer and building an organization, and then grit. It's really, really hard to do this. I'm in awe of the founders that I work with, and I feel very privileged to partner with them. And I recognize and have a lot of empathy for how difficult it is what they do. And they have to have, to do this, you just have to have a ton of grit.
For sure.
Someone who is, technically brilliant and has a deep understanding of a market, can build products uniquely, see around corners, motivate and scale a team. There's lots of components, but people can spike in different components.
For sure. Since we briefly chat about AI, what are some trends that either in the AI space or in just emerging trends in general that you feel you are observing, and that's in 2025 you feel are gonna be popping up?
Oh, okay. I'm not sure that this will be one that this is more of a fun one. I think the promise of autonomy and robotics, and when I think back to 2022 using ChatGPT for the first time for myself, but I think for a lot of people, it was like this light bulb moment for us to truly imagine the potential of AI. And I think I had that light bulb moment when I was coming home from a late dinner last year in San Francisco, and I finally got the Waymo app, and I took a Waymo home, and it felt like being in the future, like a future where I don't just drive my car, right? I don't just have this machine that assists me, but there's actually like a machine that does tasks entirely on its own in a way that is completely different. And I think we're at this inflection point for autonomy and robotics, and advances in AI are making technologies like self-driving cars, autonomous trucking, warehouse automation possible, practical, scalable. It's like, it's not just a distant dream. It's, you know, it's going to reshape urban transportation and logistics, I think, sooner than we think. And it's exciting. These aren't just incremental movements. They have the potential to really change how industries operate and how consumers, you know, go about their day-to-day lives.
For sure. I actually, as someone who took a Waymo today, I feel like that's very relevant. Thinking about like,
It's really fun to see like when out-of-towners come to San Francisco and they're like, you guys have cars that drive themselves. What's you know, and you take them in one of the cars. It's like seeing magic.
for sure. What are I guess like in terms of like in the AI space, obviously you just mentioned about like autonomous, being autonomous as well as like the robotics related things. You know, are you since like we briefly touched about like vertical AI, is there any particular vertical that you are excited about?
Yeah, I mean, I really like healthcare and life sciences, and even pre-LLM, I'd invested in a few companies that were starting to bring AI into like solving really hard problems for providers and patients. I think at some point we could have an AI doctor, and I would just be fascinating. I think if we could consume more medical services in a way that was cheaper and scalable, that we probably we'd probably unlock unique demand for that. A market where we're very constrained by just the limited number of providers that we have, and the strain that are already on those resources. My friends who are doctors, like, they love products like the medical scribes. I mean, it's wild.
Average.
Yeah, Abridge, Ambience. It's wild how fast that stuff has grown and is delivering real value for the provider.
For sure. I wanna, since like we're towards the end of the podcast, and like I wanna end with like a quick 1 minute fire round for you. What's your favorite book?
My favorite book. I have a bunch, but right now I'm thinking about Scoop by Evelyn Waugh.
Who made the biggest impact in your career?
Brad at Altimeter.
What is like, so I think you briefly talk about the lessons that you've learned from him. It's like, having conviction and, I guess like, how do you have conviction? I wanted to ask early on.
It's such a mix of like analytics and feeling like you've done all the work, but also gut. I think reading people and having your own thesis for how you think the world is going to evolve, or at least a dimension of the world is going to evolve in an area that you've studied.
What was like working with him like? This was, yeah.
It was great. I mean, it was great.
Because I feel like you guys literally invested like some of the most popular companies of all time. That's like such a interesting portfolio. Okay. Who would you invite to your dinner party?
Like a famous person, or just anyone, or?
It's your party.
It's my party. I have to think about that one. There's so many. So many different ways I could go with that. This is probably a cliched answer at this point, but just because I've been reading his autobiography, and he was prominent before, but now even more so, and at this intersection of both business and politics, I think sitting down with Elon would be fascinating.
Totally. I was like listening to his biography too, but I feel like he's such an interesting person. Where can we find you outside of work?
Running in Golden Gate Park. I just picked up tennis, so I was playing tennis in Golden Gate Park. Cooking at home with my wife, or hanging out with my nephews.
Amazing. Well, Nikhil, thank you so much for coming on the show today. It was such a cool lessons from you about like all of these like different investing takeaways as well as like trends.
Thank you for having me on. Really appreciate it.
Let me quickly